Hey, what's going on, guys? Dan here from Pico. Look, now is the time to buy. I just came across an interesting video, just kind of cruising at home on YouTube, and came across something, and it really kind of got me thinking a little bit. When people start running away from the fire, maybe it's time to turn around and take a look at what's going on. So here's a video that I wanted to share with everyone that kind of runs through what's really happening in the US. I'm just going to, I guess, play it. And as we play it, I'll stop and give my commentary on it. And keep in mind, this is for the US market, but I think a lot of it is applicable for us here. All right. So this was CNBC. Why Wall Street is buying so many
in the modern housing
US
market.
homes.
But the biggest one for Americans tends to be the price.
Prices rose 40% from the start of the pandemic.
In the final quarter of 2022, the typical U.S. home sold for a record-shattering $468,000. That's unaffordable for most Americans, leaving them to rent.
The housing costs are completely out of line with wages.
Some members of Congress believe Wall Street is a part of the problem.
What's outrageous is your tax dollars are helping Wall Street buy up single-family homes.
All right, I'm going to stop right there for a second. So this is happening in the U.S., basically in the Sun Belt, and quite a few different neighborhoods where larger corporations are coming in and they are buying up swaths of land. And in fact, single-family detached homes seem to be their type of real estate of choice. So residential dwellings. It's not unique to the U.S. There are a lot of other countries that are also doing this, but it reminds me of a conversation I had with a developer a little while ago, because they had pumped a ton of money. And when I say money, I mean research, analysts, boots on the ground to determine where is the next area that we should be investing in. So, I mean, look, when they've put tons of resources into a development and an area and buying up land, they've done their research. So it's kind of a pattern that is emerging in the U.S. and then other markets, including Canada, that I think is worth watching. So let's continue here.
Massive private equity firms like Blackstone and Pradium Partners have backed a relatively new breed of homeowner, the corporation. This growing industry buys or builds single-family homes and then rents them out.
We hear from community organizers that are door knocking in certain neighborhoods and are just surprised by how many of the homes on a particular block will be owned by a corporate landlord.
Industry advocates say corporate landlords play a critical role in addressing the nationwide housing crisis.
What we have in housing in the United States is a chronic shortage since the financial crisis.
And so the question really is, how do we fill that gap? Is the answer incentivizing new housing development, new housing investment, new market participation?
All right, I'm going to stop there again. And, the thing that kind of concerns me is we have a squeeze, obviously, on affordability. We're starting to see those numbers come down in Canada, but we're also noticing that our immigration policy is quite strong. So we need to create so many houses and places to live for a lot of these immigrants, and we're simply just so far behind on that goal that is starting to get concerning, because obviously there's going to be a squeeze on inventory. And right now, I think with the shock, as people started to realize that the cost of living has gone up, interest rates have gone up, they can't simply just go out and buy a house. And quite frankly, the qualifying rate and being qualified for a mortgage has become a lot more difficult. It's putting people on the sidelines, but I don't know how long people are going to stay on the sidelines, especially when companies like this jump in. And yes, this is the US, but we have to keep an eye on our southern partner, because a lot of this can translate into the Canadian market.
What's behind the rise of corporate landlords? And how, if at all, will the government regulate them? As of 2023, corporate landlords only command a small portion of the rental housing in this country. The vast majority of all rental units, including apartments, are owned by individual, small-time investors. But there's growing focus on single-family homes.
Institutions, large companies, only account for about 1% of all the rental housing in the United States and only about 2% of the single-family rental housing.
There's a small but mighty group of companies that lead the industry.
So Pretium is the parent company for a company called Progress Residential that owns about 90,000 homes. They were started by Don Mullen, who came out of Goldman Sachs' mortgage group. Invitation Homes was started by Blackstone, but Blackstone sold their position a long time ago. They own about 80,000 homes. American Homes for Rent, which was started by Wayne Hughes, they own about 60,000 homes. There's a company called Tricon Residential that's out of Canada. And then there's one called Amherst. Those are the big five.
I'm going to stop there. Tricon Residential. So they have quite a few units. In fact, I was doing a little bit of digging. They are a Canadian company. They are publicly traded on the New York Stock Exchange and the TSX. Now, Tricon, they primarily invest here in Canada, at least for the time being, in high-rise residential properties based in Toronto, so downtown Toronto. I think there might be a shift, and I could be wrong in this, but looking at sort of their quarterly reports, and you can see there has been quite a bit of growth, and they're experiencing most of the growth with Tricon in the US and primarily in the single family detached segment. So we're seeing a lot more acquisition. We're seeing quite a bit of growth and expansion, especially through, like I said, the Sun Belt, so Georgia, Florida, and other places. But keep in mind, this is a Canadian company, and there's a lot of interest here in the Canadian market, quite frankly. So I think as we start to shift and we shift the way we look at real estate, we have to keep this in mind that we're not the only ones that are interested in buying properties. And when you have large corporations that obviously have shareholders in mind if they're publicly traded, but they have deeper pockets than we do, likely if they are looking at a certain market in a segment and they're seeing fantastic growth and returns on it, we have to start considering maybe we have to put aside our thoughts on where interest rates are today and look at home ownership as something that might not be available for us in the future if we kind of let these companies have their way. Anyway, just some food for thought that came up. You can watch the rest of it. I'll link to it below. But what do you guys think about where the market is going? I know obviously rates have gone up, prices have gone up. Prices have gone down, rates have gone up. Are you considering getting into the market in the spring? Are you going to hold off? Do you think this is a risk for some people, these institutional investors in residential real estate? And do you think it should be regulated? Anyway, hope you guys enjoyed this, and catch you on the next one.